So interest rates are going down. But does that help the home buyer or the seller? You would think the home buyer, but does it? Today we'll listen to three different experts on CNBC explain where this crazy housing market is going. But how do you know which one to listen to? Is this a buyer's market or a seller's market? Wait till the end of the video and I'll give you some surprising answers to that question. But before we get into it, subscribe to the channel and like the video. Leave comments, and here we go.
Off the top, Jamie Dimon in short saying he doesn't think that the Fed's rate hikes matter much on a grander scale, but they certainly impact housing. The homebuilder stocks are trading lower today, adding to their declines over the past week. For more on his take on the housing sector, let's bring in Stephen Kim. He's Senior Managing Director of Home Building Equity Research at Evercore ISI. Stephen, it was not a pretty period for the homebuilder. It turns out they hate lower interest rates.
Well, they've actually moved up quite nicely over the last few months here, actually the last month or so. So we actually have had a very nice positive reaction to the lower rates. Frankly, though, I think that we have a lot more to come because right now what we're seeing on the ground is that in 2Q earnings, we're hearing that June really wasn't a great month. July probably wasn't that great either, based on our contacts. And so this move down that we've seen here over the last few weeks in the 10-year yield, which will, of course, translate to the mortgage rate, is going to be very beneficial, we think, for the housing market. And we think things are going to get better on the ground as we get into the third quarter.
Does all of that reverse or start to reverse now?
Well, I think not. I think that what we have here is we're probably going to see another step up in demand as the rates come down, but the supply remains extremely tight.
What would a half-point interest rate cut in September and maybe a further cut or two for the remainder of the year mean for the housing business?
Well, I think it's important to recognize that the mortgage rate really cues off at the 10-year yield.
New lower rates, but they did last week. Applications to refinance a home loan surged 35% compared with the previous week, according to the Mortgage Bankers Association. They were up a whopping 118% compared with the same week 1 year ago, the strongest week since May of 2022, when rates were actually much lower back then. Now, this came even though the average rate on the 30-year fix fell only very slightly last week to 6.54% from 6.55 for loans with 20% down. While rates dropped just that 1 basis point last week, they were down 33 basis points in the past 4 weeks, and they're also down 62 basis points from the same week a year ago. Now, applications for a mortgage to buy a home rose just 3% for the week, and we're still 8% lower than the same week a year ago. Today's home buyers are dealing with a lot more than high interest rates. They're still up against high home prices and low supply. There's also a feeling out there among some buyers, according to agents, that mortgage rates may fall even lower, so they're waiting before making such a large purchase. Now,
let's talk housing and the impact of those recently lowered mortgage rates. Late last week, they fell to the lowest level in over a year. Joining us now is Ivy Zellman, Zellman & Associates CEO. Ivy, it's great to see you again. I like to pick up with this a little bit on the home price piece of the equation that, influences everybody. Do you see any early signs of what direction that's going to play out?
Well, at this point, I'd say that home prices aren't likely to go higher. I think they're going to continue to decelerate. Although the drop in rates had a bit of a mixed result, it's a little early to say. But remember, mortgage rates were over 7 late April and the first half of May. So it is about 50 basis points down, which certainly helps. A good rule of thumb is that a 25 basis point decline in rates is about equivalent to a 3% decrease in price. But today, I still think that it's a buyer's market and looking for opportunities for incentives from those that are buying new construction and mortgage rate buy down. So it's tough sledding out there.
Well, there you have it. 3 experts, Stephen Kim, Diana Olick, and Stephanie Zellman, are all 3 very highly respected people in the real estate industry, giving you 3 different opinions based on the same data and talking about what's happening in the real estate market based on these lower interest rates. So how do you know which one's right and who should you listen to if you're a home seller or a home buyer? Well, the one part of the equation that all 3 of them talked about was the inventory, the amount of houses on the market. And while I don't want to disagree with such experts, it is increasing, and it's increasing fairly rapidly because home sellers are getting very nervous about missing the housing market, and so they're putting their homes on the market. And as buyers start to come off the sidelines, more sellers will follow suit. And that's how markets start to change. And you'll see a downturn in this market. And so when that happens, prices will decelerate. So my advice to anybody thinking about selling your home is don't wait, because this market is going to start decelerating. And remember, it's gone up for quite some time, so a deceleration is actually very healthy. As far as the home buyer who's waiting for this rates to continue to go down, that may not be the smartest move in the world. Why? Because as Stephen Kim said, it's the 10-year Treasury that affects the 30-year rate, not the Federal Reserve. And if you're waiting for the Federal Reserve, you might miss the boat. Just remember, when interest rates go down, they tend to trickle down. And when they go up, they pop. So you could miss a very good buying opportunity, and you might not have as much competition. So now might be the best time to try and buy a home. It's what we call a neutral market. It's not really a buyer's market, and I don't think it's very much a seller's market anymore either. Well, that's the video. Thanks for watching. I've put links to all 3 videos in the comments below. Subscribe to the channel, like the video, leave me comments, and let me know what topics you'd like me to discuss, and we'll see you next time.